Good morning, everyone. Can you hear me? Good morning, everyone. Can you hear me?
Yes.
Yes, sir.
Yes. All right, perfect. So very, very good morning to all of you and very warm welcome to the 26th batch to the training for Diploma IFRS. Very glad to see you, all of you. Few people are yet to join. However, henceforth we will start sharp at 10 o'clock. Whatever may be the, however, how many participants have joined, many of probably, because of some reasons could not join, will not wait for anyone and we will start sharp at 10 o'clock. So that is the first thing which all of us need to remember, that we are going to start on time. Now, how many days, how many number of hours you have to bear with me? We have 23 days, 3 months and almost about 110 hours approximately. So 110 hours may be increased or decreased. This is approximate number of 110 hours. We are going to complete entire curriculum over next 110 hours. Every weekend, so right from 3rd July to 26th of September, we are going to meet for each Saturday and Sunday except 1 or 2 where there are festivals. We are not going to meet on the festival day. So apart from that, we will meet on each Saturday and Sunday. Saturday, we will meet for 9 hours. Sunday, we will meet for 3 hours. Whenever there is no Saturday session, on Sunday, we will meet for 6 hours. So the entire detailed schedule is there with you. So look at the schedule once again. Even though I have promised you that the recorded versions will be available on the mobile application naming Class Plus, you will have to download that. We will send you the link. If you already have it, download that. And all the lectures which we are discussing here will get uploaded on that mobile application, which you can refer it subsequently. However, I will strongly suggest do not miss the live session. Do not miss the live session. The simple reason is whatever you do with me has more efficiency. Rather than you do the lectures on your own, because that requires absolute discipline. The main reason that you have joined live online is because you want to have discipline. So with me on Saturdays and Sundays, your curriculum will be completed. So in case of any emergency, if you miss on that particular day, then you may watch the videos at a later point of time. Even though the lectures are available, do not miss on the live session. Now, over this Saturdays and Sundays, Saturdays we will have 6 hours in 4 sessions, 1.5 hours for one session. In the morning we will take 15 minutes break. In the evening we will take 15 minutes break. And for lunch we will have 45 minutes break. And that is how our timing will be somewhere around more than 7 hours. However, learning time would be 6 hours. Now coming on to what is the IFRS, rather what is the study material we have provided you, how that study material is to be used over the period of next 3 months, I will tell you. So you must have received 4 such volumes. This is volume 1. This is volume 1 and it is named as study book. It is study book. The study book is nothing but a theoretical book. So whatever discussions we will have is entirely given in this book, volume 1, with concept builder questions. Very small questions, but those are important in order to build the concept. The discussions which we will do are far more elaborate than what is given in the book. The book is from the exam perspective. The discussions which we will do that are more from a practical oriented perspective. So you will get more from a discussion. This is just to brush up whatever we have done. That's it. And from an exam perspective. This book is also important because you may get theoretical questions in the examination, and for which this book is helpful. How to write answer to the question. That what paragraphs probably you will have to write. What are the theoretical aspects we are required to write. So this is important from that perspective. So this is volume 1. Second book is volume 2. Again, this volume 2 is nothing but your compilation of past examination question. So this book has been compiled with reference to past examination questions right from 2011. So those questions have been classified or compiled topic wise. First, the question sections in serial number or in the topic wise list which is given in the index, and answer section is subsequent to that. So it is highly recommended that this book is must before you go for the examination. You must solve the entire book at least once. If you solve it twice, then you are going to score more than 70 marks, 100%. So this book is very, very important. Then there is a volume 3, Handouts 1. So the name of this book is Handouts 1. It contains the PowerPoint handouts of the presentation which we are going to see. We are going to use PowerPoints in order to cover our syllabus. So most of the discussions will not be based on the PowerPoint. I am going to tell you something over and above extra things than the PowerPoint version. However, this PowerPoint handouts are extremely helpful before the examination, a week before the examination. You may write down your own notes in the handouts book. If there is something important, you may would like to highlight that aspect. You may would like to make additional notes on that volume 3 and even volume 4. So that volume 4 is again the same, it's a handout. However, it would have been a very big book, so we have just split that into 2 books. So these are the 4 books which you have received. If you have not received, you have registered recently and the books have not been dispatched to you, those will be received in the subsequent week. Next week you will receive that. Volume 3 and volume 4, you require to have that along with our sessions. Keep both volumes with you because there are some topics we are going to cover from volume 4 and volume 3 as well at the same time. So if we have covered, let's say, one topic from volume 3, the second topic would be from volume 4. So you have to keep both these books with you. Keep noting it down with you. Keep notes on that particular volumes. Important instruction. Keep A4 size book with you. So I'll give you just one example that which book you can have with you. So this is just an example. You can have this A4 size book. 100 pages, 200 pages, depends on how much you would like to write down in the book. But A4 size book is important just to write it down, note it down. Make your own notes. Question solving, if you can solve it on the computer, on a Word or Excel, nothing like it, because this examination is a computer-based examination. Earlier, it used to be paper-based examination. However, now, December 2020 onwards, post-COVID, it has become a computer-based examination. So you do not have to write, you have to type the answers in Word and in Excel, the similar scenarios which we use in our office environment. And that is why this is a very big change, and to our advantage it is a big change. So 23 sessions over 3 months is a huge commitment. It's for both you and me. This is my job definitely, and this is your job as well. And that's why I will request the same amount of commitment from your end. Whatever the discussions we will have, it has to be from both ends. We have to mutually do that. So when I say discussions mutually, I should be able to see you. I should be able to, see whether you are with me 100%. That helps both of us. It's not just you, it's not just me, but that shows your commitment, and then you're 100% there. Otherwise, you will keep taking calls, you will keep doing your other jobs, and your commitment will not be here. So do this class, live online class, as if you're in front of me. That will give you best benefits out of it. Even if this is not a face-to-face class, this will really give a best benefit out of it. So, and this is my experience, believe me. So most of the things you'll have to trust, and you have to just follow what I'm saying. Now, this was about the books. Now, how we are going to start? There are a lot of questions in front of in the mind of graduates who are not chartered accountants, MBAs, that we are not conversant much with the accounting standards. It is understandable to us? Can I understand that? Is it simplified? Can I start from the basic? Yes. So don't worry about that. We are going to start from basic, right from how to read an accounting standard. How to read an accounting standard. And once we get on to how to read an accounting standard, there are a lot of 4 to 5 principles. We'll understand those 5 principles. For each accounting standard, those 5 principles or some of the principles will be there. And we will evaluate each accounting standard based on those 5 principles. So do not worry about whether you will understand or not. I will try to make it the most simple manner, and I will explain it in a most simplified manner with the help of examples. Once I explain the concept, I will open up the forum for question and answer, and then you can actually ask your question, raise your hand, ask your questions, and we can have a discussion around it. So it will have discussions. Do not hesitate to ask questions. Every one of us are here to learning, including me. So many times, so this is a 26 batch, not even a single batch has gone that I have not learned anything new. So do not hesitate to ask questions. Make the best out of it. 3 months, 23 sessions. I will share my screen with you, and we will start with the first topic. Now, quick introduction to what is IFRS, what is IASB, and the qualification which we are going to do, this ACCA Diploma IFRS. Quickly, let's understand about that, and then we can move on to the technical topics. Background of IFRS. Now, many times we wonder that why IFRSs are important. What is IFRS exactly is about? IFRS is International Financial Reporting Standards. Why it has been introduced, why in India we are required to do that, we will see that, and why world is demanding IFRS. So if you see, accounting is extremely vital for the economic prosperity. Because even if you do business and you do not have a tab on how your business is going on, whether you are earning profits or getting into losses, you will not be able to do the business. So any businessman, even from a non-accounting background, must have a knowledge of accounting to some extent. And that's why accounting is extremely wide. Now imagine if I start speaking in some different language, let's say my mother tongue Marathi, if you do not understand Marathi, you'll not be able to decode what I'm saying. You're not able to understand what I'm saying. Same happens with the financial reporting. Financial reporting, we can understand it from balance sheet, profit and loss account, cash flow statements and notes to accounts. But while we prepare these financial statements, it has certain language, that accounting language. We call it as a generally accepted accounting principles. That language, debit and credit, will never change. It will remain debit and credit. All three rules will remain constant across, whatever may be the gap. However, the principles of recording debit and credit may be different. When to record, at what amount to record, these are the principles, these are the policies. These gaps are different for each country. US has US gap, UK has a UK gap, then Dutch gap, German gap, Indian gap, Australian gap. Every country has their different policies and principles based on which they prepare financial statements. If I would like to understand the financial statements which are prepared in US GAAP, if I do not know the policies and principles under US GAAP, I will not be able to interpret those financial statements. That interpretation is very, very important if I want to do business. And this problem arose first time in post World War II, after 1950s mostly. When globalization started picking up, American businesses started acquiring the European businesses or vice versa, whatever it is. And at that time, need was first felt that we should have a common accounting language so that we can understand the financial statements of each other and easily we should be able to understand. And that's why in 1973, IASC was formed. International Accounting Standards Committee was formed. This International Accounting Standards Committee, they framed accounting standards which could be used by all countries in the world. So that these are the common standards, and if I'm in India, I want to do business in US or UK, in Europe, I should be able to understand their businesses. They should be able to understand my businesses, my financial statements. And that is why the standards have been developed. And so on and so forth. Today, the globalization is at the peak. And that is why we need some common platform. And thus IFRS, so from 1973 to 2000, IASC framed in the International Accounting Standards 1 to 41. However, no one was using those accounting standards. And then subsequently, those accounting standards, IASC thought we have done a lot of work, so let's spread the work which has been prepared by us, created by us, and that's why they have changed their committee to board. IASC was changed to IASB in July 2000. They took over all the standards and they started spreading the work which they have done earlier. And that is how the IFRS started spreading. In 2005, European Union said that all public entities will prepare their financial statements under IFRS. And that is how the movement of IFRS gained momentum. So this is a little quick background on IFRS. If you ask what is the situation today, there are 166 jurisdictions which were evaluated by IASB, that how many of 166 jurisdictions, out of 166, how many have started using IFRS. So they understood that out of 166, 144 jurisdictions either use IFRS or permit the use of IFRS. Even in India, so if you see that 144 in that list, actually the India's name is not there in 144. However, we have actually started using the IFRS but in a different version. We are using the IND-AS, Indian Accounting Standards, which are in line with IFRS. So we are using a version of IFRS per se. So like that, there are 144 countries. So earlier, generally accountants were not, they were not exposed to the international career. Because of the IFRS, the world is open to us. Because we know IFRS, you can go to any country for a job because their reporting standards, our reporting standards are quite similar to each other. So this is what the background is of IFRS. I'll quickly come on why we are doing then diploma IFRS. If you see, there is no qualification per se on IFRS as on today. We do not have any qualification. We do not have any qualification. In CA syllabus or in ICWA or in CA syllabus, they have recently included the IFRSs or the Indian Accounting Standard, which is a version of IFRS in India which we use. But apart from this professional curriculum or professional courses, very few colleges and universities have included IFRS as a part of their curriculum. And to be very honest, students feel that this subject is little difficult. I agree that subject is difficult only if you do not study. So today also we have many that we may find the subject difficult. Don't worry about this. You just have to follow what I'm saying on a daily basis, on a weekly basis, and you will be with me. You will understand this. This is very, very simple. You just need to understand the logic. We are going to understand it logically. And that's why there is no curriculum, there is no qualification per se. ACCA has launched this course, Diploma IFRS. ACCA is Association of Chartered Certified Accountants. This institute is based in UK, London. It is one of the largest accounting body in the world and very old. It has been formed in 1904. They have more than 5.5 lakh students and almost about 2.5 lakhs, almost about 2.5 lakh members. So this institute, it is like ICAI in India, Institute of Chartered Accountants of India, or ICMA, so Cost and Works Accounting. So they also call it ICAI or ICSI. So similarly, this ACCA is an institute which is a professional body, it's an accounting body. They have launched a course on IFRS, just a single subject. This is not a degree, that's why this is not a degree. This is a diploma. If you clear this examination, you will get a diploma certificate. This will provide you a working knowledge in the field of IFRS. Believe me, this curriculum is very, very good. This will give you a very apt knowledge which is required for your job or practice or whatever it is. I'm not saying you will be able to start implementation right from the next day once you get the degree. This will not happen. You need to have experience also in this. But the working knowledge which is required at the basic level, you will have that with this particular kind of a curriculum. So what exactly they have given, so who can do it and how the examination has been framed, we will discuss quickly. You are already doing this course, so you are eligible. But just quickly on that, number one, who is eligible? Chartered accountant, because they say a professional accountant. So of that particular country's professional accounting body has given you a degree. It may be CA, or in some other country it may be something different. So if they have given a degree to you, then you are a professional accountant. In India, it is a chartered accountant. He is directly eligible for this course without any work experience requirement. Apart from chartered accountants, everyone requires or have to have a work experience of 2 years in finance and accounts department if he's a commerce graduate. BCom or MCom, not BBA or MBA, only BCom or MCom. BCom and MCom are not chartered accountants, so they need to have with that degree, they need to have 2 years of working experience. If they are not BCom, they are BBA, MBA or something else, then they are required to have, along with that degree, 3 years of working experience in finance and accounts department, not any other department, finance and accounts department. These people are eligible for the examination. This exam is of 100 marks. This exam is of 100 marks and it is computer based, very important. It is computer based and it is for 3 hours and 15 minutes. Earlier, this 15 minutes were given only for reading the question paper. Subsequently, they have removed that restriction and now you can write answer sheet during that 15 minutes as well. And that's why this is 3 hours and 15 minutes examination. Computer based, and our life has been simplified much because of the computer based examination. Many of you are professionals who have left the studying or writing long back. If you start writing today, believe me, within 5 minutes, your hand gets heavy. You can't write after 5 minutes. And here you are required to write it for 3 hours and 15 minutes. So this was one of the biggest reason of failures in Diploma IFRS earlier. Now this point has been removed. You have to type it in a Word or Excel based scenarios, not exactly Word or Excel. So they have built a different separate utility for that. Now, examination is a biannual examination. It is in December as well as it is in June. So it is a biannual examination. It is in December and in June. In December second week and June second week. Generally on Friday only. Okay, so second week, second Friday of that month. So you will have that examination. This time it will be, so I'll have to check, it was, last time it was on the 11th June. December, they have yet to declare the date. Probably they will declare it or might have been declared. I've not checked it in last 1 week, that website. But whenever the examination gets declared, we will let you know about the examination dates have been declared, what all documentation is required, etc. will be informed to you separately. Please keep checking on your mails on a regular basis from our side, because whenever the exam, so as and when we are here talking to each other, I will also let you know during the class. But if you are watching the recorded sessions, then you will have to keep a watch on the mails as well. We do not, so there is a group for WhatsApp communication, but that's a temporary one. Do not just rely on the WhatsApp messages. We communicate mainly through email because that's the official source of communication. So do keep checking your emails on a regular basis. How the question paper is set. This is a 100-mark question paper which has split into 4 sections. Question 1, 2, 3 and 4. All have equal marks, 25 marks each. 25 marks each. Question number 1 is always on consolidation. You have to prepare consolidated financial statements of an entity. So there will be in question 1 parent, 1 subsidiary. You will have to consolidate, prepare a consolidated balance sheet or consolidated P&L, not both in one question, not possible. So either balance sheet or P&L. Balance 3 questions are of 25 marks, but they will be split into various topics, except question number 2 that may be on a one single topic. Question 2 or question 3 will be on one single topic, and that will be for 25 marks, and it will include the theoretical aspects as well. Now, from where do you see what is there in the syllabus? How many topics are there? So I'll tell you. ACCA releases their syllabus and examinable documents on a regular basis. I'll take you through that once quickly. This is very important for us to know, and that's why I am taking you through this. This is examinable document which is there for 2021 and 22. You will see the list of standards which are applicable for these exams are given here. And I will tell you, you are not aware about this, but this is a new topic, new insertion. This is a new insertion. So you have to study this, ethics of a professional accountants, International Code of Ethics for Professional Accountants. It is purely a theoretical topic. This topic I have included the sections 100, 110 to 115 and 120 in volume 1. I have included that. However, I am not going to conduct a lecture on that. The simple reason is that it's extremely theoretical. Nothing logic has to be applied. No concepts we have to learn in that particular topic. You just have to read, remember a few things, few pointers, and if question comes, you have to write it down. To my experience, listen me now carefully. To my experience, whenever ACCA introduces any new topic, in the syllabus, they ask a question in the examination. So in December 2021 or June 2022, I am expecting this question on this topic, which is highly important and highly expected question on this particular topic. So you mark it with you that a theoretical question will come on this particular topic. 5 marks, 10 marks, it may be for whatever number. So I remember when leases was asked for 3 exams, they have continuously asking on leases. Whenever revenue was included in the syllabus, they were asking revenue IFRS 15 on a continuous 3 examinations. So believe me, for some or the other section or in examination, they will ask this particular question on this particular topic. So be prepared with this particular topic. This is given in volume 1, purely theoretical. So you have to read it, make your notes for remembering, and then you'll have to move it. Apart from that, if you see, they also publish this study guide. And this is for December 2021 and June 2022. So if you see this is elaborate guidance. So how many pages? There are almost 14 pages document. This is 14-page document. This has been included in volume 1. So don't worry. Both the things are included in volume 1 in order to for your ready reference. So you will be able to see that in volume 1. First few pages is study guide and examinable documents. We will try and check after each topic whether we have covered everything from this. So for example, if you see in A, this is the syllabus in detail, and they have included this recently. Last time it was not there. So that is how we understand this is changed. Let's say in the revenue recognition, so these are the topics they have given, but subsequently they have explained it in detail. So let's say revenue recognition, what is expected out of you? So this is given in detail, what is expected out of you. And entire study material is based on this particular, on the basis of this study guide. So we have covered something more. What is not covered is also covered sometimes during our discussion, but everything has been covered from this particular study. So you have to refer this on a regular basis as and when we are going and moving ahead. Now, Passing percentage is 50%. You have to get 50 marks out of 100 in the examination. My experience is worldwide the passing percentage, not this percentage, this is 50% only. So out of 100, you have to get 50 marks. Worldwide, if there are 1,000 students are there, at least 500 to 600 students pass. 500 to 5,000, 550 students pass out of 1,000. So passing percentage is really good. Those who fail have different reasons altogether. In India, the passing percentage is a little higher. So we have passing percentage somewhere around 70 to 75%. So it keeps on changing. We have to aim that no one from our batch should fail. We should have 100% as a target for passing the examination in December 2021. So keep this in mind. So we have seen this, how many hours we are going to see or we are going to cover over the next 3 months. Now, before I move on to the technical thing, do you have any questions which I can take up quickly now? You can ask me. So apart from our sessions, we are going to have 110 hours. At least equal number of hours you will have to put in for your own understanding. So you take total with these sessions, total 120 hours you will have to put in minimum. I'm saying minimum. So if you think you are a little weak in accounting, add up 30 more hours. So 250 hours of study. If you see the websites of ACCA and other websites, they will tell you that approximately 120 to 150 hours of study is enough. But what I think, if you want to be doubly sure on you want to clear this examination is first attempt itself, do not take chances. Keep at least 220 hours for your own study. Because before exams, designed this syllabus and topics such that everyone should be able to understand. We are giving enough time to understand the concept. If we understand the concept, it is very difficult to forget. If I just keep you and engage you from an exam oriented syllabus, then it's boring and you might forget it very quickly. So the equal number of hours are expected from you. So I generally tell this is not a magical stick that if you attend the sessions and you will get clear automatically. It will not happen, believe me. You will have to put in your time equally along and beside these 110 hours. So this question is entirely written examination, nothing or no MCQs, number one. Second, first question you will have to solve. All other questions, some or the other part will be of solving and explaining. So this examination is a professional examination. The thrust is not about just writing. It's about writing what you understand. It's the logic, whether you understand that logic or not. So you have to explain. So let's say in property, plant and equipment, there is one particular question about measurement of the property, plant and equipment, and there are certain expenses which you have decided to include, which you have decided not to include as a part of cost. You have to write explanation below the answer that why you have not included that cost or that expense as a part of cost, or why you have included that as a part of cost. So explanation is very important. Everything you will have to write. So it's not theory per se. It's not theory. It's not explain the definition of property, plant and equipment. No. So very few questions will come around that theory per se. But most of the things will be practical. You have to solve and explain, or you have to just explain. So that sort of questions will come on throughout question 1 to question 4. Are you with me?
Yeah. Thank you, sir. Understood.
All right. Yes, definitely we have that platform on ACCA website itself. We will send you the link. So Amrita, please note down that we need to send them a link for platform. So there is a question paper, full-fledged question paper given. Even last December 2020 question paper is also in the similar manner. It is available for you. You can go there, you can solve the question in the examination environment. So one, there is a mock test, which is a normal CBE practice platform. And second, December 2020 examination question paper is also there, where you can do the practice. So there are two full-fledged question papers which are there on the ACCA website. You can access those and you can start practicing there once we complete our syllabus. Let's start with what is IFRS and what IFRS covers. So, as I said, IASC started framing this International Accounting Standards Committee. They started framing this accounting standard from 73 and they did their work till 2000. And the standards they framed nomenclatured as IS 1 to IS 41. So these are IS 1 to IS 41. These are about 24 standards. These are about 24 standards. Even if the number looks like 41, these are not the 41 standards. These are only 24 standards. In between standards are deleted. I'll give you one example. There is IS 1, which is on presentation of financial statements. This is the first topic which we are going to understand and discuss after our first break. IS 2 is on inventories. And there is no IS 3, 4, 5, 6. These four standards are deleted. Directly there is IS 7. IS 7 is on cash flow statements. So like that, in between standards are deleted if there are any revision in a particular standard. The earlier standard deleted and the new standard was introduced. So there are about 24 standards, IS 1 to 41. Apart from that, IASC, in supporting to the standard, issued certain additional guidances. If there are any ambiguities with respect to any provision, they issued a supporting document, supporting some note that is called as a standard interpretation committee. We call it as a SIC. SICs are not within the syllabus. In syllabus, there are only these standards, and that too, not all these standards. Few standards are not applicable for the examination. So SICs and subsequent guidance, we call it as a IFRIC. These are not included in the syllabus. However, this is the guidance issued by IASC from 73 to 2000. Currently, there are 5 SICs which are present. Then, as I said, IASB took over from July 2000 from IASC to start spreading the word. So first thing which they did, they actually adopted these standards. And any new requirement came on, any new guidance to be issued, they issued with a different nomenclature. The nomenclature was kept as IFRS. So these standards are nomenclatured as International Financial Reporting Standards. Again, there are few standards which are common in this. So for example, these are actually 17 standards because 17 is not yet effective, but IFRS 4 is effective. It is the same topic, insurance contracts. IFRS 4 is insurance contract, IFRS 17 is also insurance contract, but 17 will be effective from subsequent year, 2022. It's not yet declared, but we are expecting that to be effective from 2022 onwards. Until that time, there are only 16 standards, but if we say there are 16, we will have this 24 plus the 17 standards as IFRS. So we have 41 standards as of now. We have total 41 standards as of now. Once 17 will be effective, 4 will be deleted. 4 will be deleted and there will be then 40 standards which will be applicable. So when we say IFRS consists, now this is one of the point of confusion. This is a big point of confusion. A lot of students come and say, I see IS1, IS 24, then 41, and then suddenly we see IFRS. Then what is IFRS exactly? IFRS consists of this 1, 2, this 3 IFRS and interpretations issued by ISC. We call it as an IFRS. So this set of 4 is called as IFRS. This set of 4 is called as IFRS. What it covers in this set of 4, we have 41 standards and we have 18 interpretations. We have 41 standards and we have 18 interpretations, 18 interpretations. So you have to keep this in mind. So IFRS and ISS are both in together, they called as a IFRS. No single standard is common between these two sets. Nothing is common. No topic is common in these two sets. So IS1 is presentation of financial statements. IFRS 1 is a first time adoption. IFRS 1 is a first time adoption. IS2 is inventories. IFRS 2 is your share-based payments. So I'll show you where you will be able to see the list. You have volume 3. So take out volume 3. In volume 3, if you turn up the pages after index, you will find the standard listing. You will find the standard listing. You will find the list of standards under IFRS. Then you will find the list of standards under Ind AS. That is just for the Indian purpose. Now, as a rule, we are going to discuss only purely IFRS. However, I am going to give you all the differences. Once we complete IFRS, I am going to give you the differences. So anyone who is watching these videos or this training sessions in a recorded form, who is out of India and he doesn't require Ind AS, he can ignore that aspect completely. So in book, we have included the list of Ind AS as well, just for the reference purpose. Alright. So this is what is IFRS is all about. Now in IFRS, all the aspects which are given in plain and bold text are also very much important. Now how the standard is framed. I'll come to that. How the standard is framed. Now whenever I say, this is IS1, IS41, IFRS 1 to 17, how the standard has been framed. How can you read that accounting standard? That is very, very important. So that accounting standard contains bold and plain type, both the paragraphs. All have equal prominence. It's not that bold paragraphs are important than the plain text. No. Both have equal prominence, equal authority. You have to keep this in mind. If you see the accounting standard, accounting standard starts with iron paragraphs. This is nothing but introduction paragraphs. This will actually introduce the subject. This will actually introduce the subject or that accounting standard subject to the reader first. What is the history behind framing this accounting standard? If this standard has been modified, if the revised standard has been issued, then why it has been revised? What were the circumstances under which it has been revised? So you will be able to find it in introduction paragraphs, IN paragraphs. Then comes the main standard. This we call as a bare text. This bare text is extremely boring. If you start reading this bare text, you will fall asleep in within minutes. I bet you on that. So there has to be purpose while we read an accounting standard, why we are reading an accounting standard, and what we will get by reading the accounting standard is very important for us to understand. I am going to give you that purpose once we start discussing the technical topic. So anyone should be able to understand this. Don't worry about it. After the bare text gives you the main principle or main provision. How to interpret that? So I will discuss with you, this provision means this. It has to be interpreted in this manner. What is meant by this? How to apply this provision in practice? All these things I will discuss with you. From where I have understood this? Is it my own interpretation? If it is, then why will you buy it? So it is not my interpretation. It is interpretation given by the accounting standard itself. In addition to bare text, you will have application guidance, plus you have basis of conclusion. Plus you have basis of conclusion. These are called as AG paragraph. These are BC paragraphs. These are IN paragraphs. AG is application guidance, BC is basis of conclusion. Whatever the interpretations I am giving to you are not my interpretations, or any reference book you read is not the interpretation of the author. It's the interpretation given in the application guidance or basis of conclusion. In very rare circumstances, it might happen that conclusion is not given in any of this, or probably it is difficult. There is an ambiguity. So in such case, there is a practice, or based on a practice, the interpretations come. In that case, author may have his own. I may have my own view in that case, but this is extremely rare. However, most of the interpretations, 99% interpretations will come from this IN paragraphs, main standard, AG and BC paragraphs. There is also one aspect to it, which is dissenting opinions. Dissenting opinions. These dissenting opinions are nothing but once the standard is issued, it is not issued directly without consent of the stakeholders. So once the standard is issued, it is issued in the form of draft. That draft is open for discussion. So then a lot of stakeholders or those who are going to get affected because of the accounting standard send their views, opinions on that particular provision. Accordingly, that standard setting body will decide whether to change it or they will keep that provisions exactly the same. If they decide to keep the same, then they will have to give reason why they have kept the same despite of having so many of the dissenting opinions. If they decide to change, then also they'll have to provide the reason why they have changed that provision which was there originally in draft, but now it has been changed. Why? So XYZ reasons given in dissenting opinions. There we can actually understand the objective of the standard setter for framing particular policy in a particular manner. And there are illustrative examples as well. So in addition to this, illustrative examples, you will also find this. For let's say an example, IFRS 16 leases. There are a lot of illustrative examples. IFRS 15, there are a lot of illustrative examples which are given after the dissenting opinions. You will find those illustrative examples. From there, we can actually interpret something which was not clear from the application guidance, basis of conclusion or main standard. However, this is not a part of the standard per se. Dissenting opinions and the illustrative examples, these are not part of the standard per se. Even though they are included in the standard, these are not part of the standard. Application guidance and basis of conclusion are part of the standard itself. Alright, so this is the structure of the accounting standard. Whatever we have seen this accounting standard have to be read in these sections. What you have to read, I have not still discussed with you. How to read an accounting standard, I have not yet. What all things you have to check, I have not yet discussed. I will discuss that subsequent to, or rather while we are discussing our first technical topic. I'll quickly discuss this about the structure, organization structure of IASB. This was only once it has been asked in the examination, very long back. Since then it has not been asked. This is not very important. I mean, what will you do, or what anyone will do to by understanding the IASB structure, but just for the sake of understanding, we'll see this. Now, monitoring board is amongst all is the recent body which has been formed to monitor the work of IFRS Foundation. IFRS Foundation has 22 trustees. Monitoring body also has a members from various countries and various countries, stock monitoring body, stock exchange monitoring body like SEBI. Then they may have public accounting bodies like ICAI, ACCA. Their members will be a part of the monitoring body. The same members or members of the same body may be in the part of IFRS Foundation. These are 22 trustees. They approve the budget, appoint the members, oversee, raise funds, oversee the work done by the IASB, etc. They do all these things. And main work is done by IASB. They have 16 members. 16 members as a part of their team, who actually approves the standard, frame the standard, send it for approvals, or open the draft for the discussions, etc. IASB is actually supported by the IFRS Advisory Council. They have approximately about 40 members. Again, these members are for the public accounting bodies of various countries, or stock exchange boards, etc., or security exchange boards. So these are those 40 members who support IASB, whether to introduce any new standard, whether to revise any standard, is there any requirement of a new accounting standard. So they support IASB with respect to that. And IFRS Interpretation Committee is a subcommittee of IASB. They are into interpretations. So the guidance which we saw, IFRIC, is actually issued by IFRS Interpretations Committee. I'll give you one example. In 2008, there was a financial crisis worldwide. A lot of banks collapsed, and there was a huge, we were approaching towards depression. We were in recession at that time. However, we came out of that pretty soon. At that time, IFRS Interpretation Committee actually studied the scenario, and they suggested IASB that we need a new standard. They studied the reasons why that collapse happened. What went wrong in the financial reporting? Had that not went wrong, we would not have faced that situation. So the study was done by IFRS Interpretation Committee, and similar studies they undertake in order to issue the interpretations. So this is the structure of the, so there are 14 members. 14 members in the IFRS Interpretation Committee. In examination, they will not ask about this number of members and anything, but you should at least know that what is the structure. IASB reports to IFRS Foundation. Then IFRS Advisory Council appoints IASB members, etc. They also support them in identifying the topics. and IFRS Interpretation Committee reports to IASB. So this is the reporting structure amongst the IFRS Foundation. Any questions you have before we move on to the Indian scenario? This is not applicable for the examination, this scenario. Whatever we discussed till here is applicable for the examination. So I again open up for the quick question answer session, and then I'll move on to the Indian version. Any questions, please? In volume 1, there is a study text contained, and after that there is an introduction. That introduction provides you the entire syllabus. So if you go to page number Roman 5, V, in volume 1, page Roman 5, you will see that examinable documents, those standards are applicable for the examination.
Yeah, got it, sir.
So refer that for the examination syllabus.
Yeah. Thank you so much, sir.
Alright, now, India's convergence in India. I'll quickly complete this. Anyone who is out of India, who is not required to understand about the Ind AS, can ignore this section. Subsequent 10-15 minutes discussion he can ignore. So what is there in India? We are part of the globalization. We are one of the biggest economies in the world. We cannot stay away from the globalization. And we need to take part in this IFRS movement as such. And so we promised G20 nations in 2008 that we will move on to the IFRS very soon. So when we said very soon, when? So we earlier declared that 2011, but because of a lot of hindrances, a lot of hurdles, we were not prepared. And that's why we decided to do this IFRS and postpone this IFRS to 2015. So at that time, we didn't declare it to do it from 2015, but in 2015, we came out with a notification. On 16th February 2015, we came out with a notification applying a version of IFRS. So there are two ways of applying IFRSs. One mode is an adoption mode, and other is convergence. And other is convergence mode. Adoption mode is accepting all of the IFRSs as it is, without making any change in a standard, without making a single change in those accounting standards, which we have seen. 24 standards in IS and in IFRS 17 standards. If we are accepting that, then we are adopting as it is. We are not going for that approach. India is not going for that approach. We are going for the convergence mode. We are preparing set which is parallel, which is similar to IFRS. We call it as an Ind AS. Indian accounting standards converged with IFRS. Indian accounting standards converged with IFRS. For this, we issued rules in Companies Act. In Companies Act, we have separately issued Companies Indian Accounting Standard Rules 2015. This is in Companies Act. These have been notified by way of Companies Act, and that's why we call it as Indian Accounting Standard Rules. We call it as Ind AS. We still have the older gap. And that is nomenclatured as Companies Accounting Standard Rules 2006, amended from the time to time. This is old Indian gap. We call it as old Indian gap. It is also there. So not all companies are required to follow this Companies Indian Accounting Standard Rules. Very few companies. I will tell you which companies are required to follow this. So Now these are not few, these are many companies. So there are two sets which we are following. Normal accounting standards and second is Ind AS. So you'll have to remember. We have prepared this in line with IFRS. In line with IFRS. So we are opting for the convergence route. Now, how many standards are there? We have adopted almost all the standards. Almost all the standards. I'll tell you how many standards we have adopted. I'll go directly to that. So if you see what we have done, so for IS 1 to 41, we have taken the standards as it is. And wherever we require certain changes, we have removed that part out of that standard. Wherever it or whatever is not there in the standard, however we want that in the standard, we have inserted that additional thing in the standard. So those are called as a carve-outs and carve-ins. So after carve-out or carve-in, we have prepared this set. We have nomenclatured it as Ind AS 1 to Ind AS 41. Numbering is exactly same, name is exactly the same. IS 1 is presentation of financial statements. Ind AS 1 is also presentation of financial statements. Not just that, paragraph numbers are also kept same in order to have the similarity with IFRS. Just that if one paragraph which is there under Ind AS and we do not need under Indian scenarios, we have removed that para, but we have written deleted in front of that paragraph. Number has been maintained. We have just mentioned deleted in front of that paragraph. Similarly, we have converted all these standards, IFRS 1. Now, if you see, a lot of people ask me here, this is Ind AS 101 to 116. So do we have 116 accounting standards to study? This was a very, what I would say, very concerning questions from a lot of not just students, it's from the corporate sector. So no. If you see, we have maintained the nomenclature, here also Ind AS, here also Ind AS. So we cannot maintain the same number. We have to change the number. And that's why we have changed the series. For IFRS, this 17 standard, we have series as 101 to 116. We have total 16 standards here and we have total 23 standards here. So which standard is not there? Here under IFRS, we have 24 standards. Under Ind AS, we have 23 standards. So there is one standard, IS 26. It's not included. So financial reporting for the retirement benefit plan. This is IS 26, which is there under IFRS. We have not created parallel standard for that particular topic. So we have 23 standards under Ind AS. Under IFRS, we have 17 standards here. We have not notified a standard with respect to insurance yet. And that's why we have 16 standards here. And as such, if you see, we have 39 standards in total. We have 39 standards in total. As such, only one standard we do not have. Even if IFRS includes this IFRS 17, it is not yet applicable. And that's why even IFRS, even if we say there are 41 standards, there are 40 standards. And we have 39 standards. Only one standard is not there, IS 26. What about interpretations? These are 5, these are 13. So we have included these interpretation in a respective accounting standard. In the respective accounting standard as an appendix. You can see this. You can see this. You can open up the standard listing. I will give you one example. There is IFRIC 1, changes in existing decommissioning and restoration liability. This is IFRIC 1. Check that. That interpretation you will find. Now this interpretation, you will not able to make out which topic is this. This is with respect to IS 16, property, plant and equipment. Go to Index listing and go to IS 16. You will find changes in existing, Appendix A, changes in existing decommissioning and restoration and similar liabilities. So that interpretation has been included in the standard by way of an appendix under Index 16 itself. Another example quickly. There is IFRIC 20, stripping cost in the production phase of surface mining. IFRIC 20, serial number 12 in the IFRIC listing. And if you see again Index 16 you will see Appendix B, stripping cost in the production phase of a surface mine. So this is just a couple of examples I have given. All the interpretations, whether it is SICs or it is IFRICs, have been included in that particular topic, respective accounting standard by way of a appendix. I hope you are with me with respect to whatever we have discussed under Index. There should be no confusion. Whenever we are finding out any corresponding standard to IS, we have to find it in the series Index 1 to 41. If there is a corresponding standard or a standard corresponding to IFRS 1 to 17, we'll find it in the series Index 101 to 1160. Okay? So this is very, very important for us to know and to have knowledge, because most of us are in India. If you are out of India, you do not require this. Anyways, you are going to ignore it. How Index has been adopted in Indian scenario, how IFRS have been opted, or how we have converged with IFRS in Indian scenario. We'll quickly see this. We have seen the standards also. These are the standards, how the standards from IFRS have been converged under Index. The series also we know 1 to 41 is 1 to 41. Nomenclature is instead of IS, it's Index. For IFRS, it is Index, but the number series has been changed from 1 to 101. So instead of 1, we are using it 101 for IFRS standards. Now we have just yet to see how indices, again this is not relevant for the examination, how these standards are required to apply, which companies are required to apply the indices in day-to-day business. So if you see, I have bifurcated, or I have done, or I have made the two categories. Category number 1 is companies, category number 2 is NBFCs. Companies. Which companies are required to convert to Index or adopt Index? So Index we are adopting. Indices are converged with IFRS. IFRS have not been adopted. We are not adopting IFRS standard as it is. No. We are taking IFRS as a base. We have prepared our own accounting standards. Those are called as Index, and those standards we are adopting. So which companies are required to comply with Index in India? All listed companies, or the companies in the process of listing, companies which are in the process of listing and listed companies. So here you have to remember all the listed companies on main board, listed on main board, and not on SME stock exchange. If any company is listed on SME stock exchange, that is not listed company for this notification. And that's why listed company is a company listed on any recognized stock exchange on main board, or the company which is in the process of listing. So the company who has filed its DRHP is the company, or who is about to file its DRHP is the company who is in the process of listing. So if you are interested in understanding how the financial statements are prepared while companies in the process of listing, you can visit our website. There is a section blogs. In the blog section, you can check the fourth or fifth blog is there. There are a couple of blogs which are with respect to restatement in IPOs. So there we have mentioned elaborately that which accounting framework is required for companies which are in the process of listing. So which is not as a part of this examination, so forget about it. However, in India, Ind AS is applicable to all companies which are listed companies or those companies who are in the process of listing. So it may be debt instrument, it may be equity instrument. So many companies have debentures listed. So for them also it is applicable. Ind AS is applicable. So set 1, companies which are listed or in the process of listing. Second number of companies which are private, unlisted companies, but not required for all unlisted companies. Here they have public responsibility because they take money from public. They take money from public. Unlisted companies do not take money from public. And that's why for unlisted, not all unlisted companies are required to follow Ind AS. Only those companies whose net worth is 250 crores or more. So if it is exactly 250 crores, still Ind AS is applicable. If it's more than 250 crores, it is applicable. Correct? Now, what is net worth? Net worth is given here. Now, if you see net worth is all assets minus all liabilities, or it can be equity, share capital plus all reserves. So this is one method. All assets minus all liabilities minus few reserves we have to reduce. Revaluation reserve, depreciation write back, and amalgamation reserve. You have to reduce. Here also you'll have to reduce that. Less revaluation reserve, less depreciation write back, less amalgamation reserve. So this is considered as the net worth. Correct? So this is net worth. If you calculate net worth, let's say as on 31st March 2021, then if your net worth crosses 250 crores, then from subsequent year Ind AS will be applicable. Then from subsequent year Ind AS will be applicable. In addition to that, so this is first company. This is company first category. This is second category. And this is third category of company to which Ind AS will be applicable. Holding subsidiary, joint venture, associate of this company or this company. Even if such holding, even if such subsidiary, even if such joint venture does not satisfy the above two criteria on their own. So let's say this is parent company. Parent has subsidiary. Parent has associate, and parent has joint venture. This parent is either listed or this parent is in the process of listing, or it has a net worth of 250 crores. If this is the case, this parent will automatically within the ambit of Ind AS, will come within the ambit of Ind AS. They will have to comply with Ind AS. So comply with Ind AS, but at the same time their subsidiary, associate, joint venture, even if they are not listed, even if their net worth is not beyond 250 crores, still they will have to comply with Ind AS. Comply with Ind AS. So this is by direct criteria, direct criteria, and this is by indirect criteria. Because of someone, it is applicable to these companies, not because of individual net worth or listing criteria. This is because parents' individual criteria has been made, and it is subsidiary, joint venture, associate of such company which is within the ambit of Ind AS, and that's why it is applicable to S1, associate and joint venture. Are you with me here, everyone? So this is the first criteria with respect to companies. NBFCs, exactly same criteria. Exactly same criteria. That is listed NBFC or NBFC in the process of listing. So either debt instrument or equity instrument, not on SME, main board. This is also true. All other NBFCs whose net worth is 250 crores or more, exactly similar criteria. Same case for holding subsidiary and joint venture. Holding subsidiary, joint venture and associate. For all of them, it is required. So let's say this parent has a holding. Holding does not satisfy any of the criteria. Tata Sons is not listed, for example. Individual net worth, it's more than 250 crores, but let's say, for example, it's not more than 250 crores. Still, because of the parent, this company, its subsidiary, it is applicable to parent, it is applicable to its child and everyone else. So, indirect applicability and direct applicability. It's exactly same for companies and NBFCs. The only difference between two is this was applicable from 2016-17 and this was applicable from 2018-19. So 2016-17, 17-18. So here also there were two phases. Now that date has been gone and there is no relevance of that phase 1 and phase 2, and that's why I'm not getting into that nitty-gritties. What is a phase 1 and phase 2? The companies can also adopt this Ind AS voluntarily. So why anyone would like to voluntarily adopt this? Why any company would like to adopt this voluntarily? It's very simple. If my parent is sitting in Europe, they require me to present financial statements in IFRS. They require me to prepare financial statement in IFRS. I am actually preparing Indian GAAP for Indian GAAP compliances, and for parent I am preparing group reporting under IFRS. So I am preparing two sets of financial statements. It's always better for me to adopt Ind AS voluntarily because Ind AS are very close with IFRS, and that's why I will remove the duplication of efforts and I will adopt by adopting the Ind AS voluntarily. I hope this clarifies why voluntary adoption of Ind AS can be done. However, this is not allowed for NBFCs. Only companies can adopt Ind AS voluntarily. NBFCs, banks, insurance companies cannot adopt Ind AS voluntarily. Strictly prohibited. Now, we had seen what is net worth, and net worth should be considered as based on the audited financial statements. So if net worth criteria is satisfied on 31st March 2021, it will be applicable from subsequent date. Interestingly, most interestingly, once Ind AS are followed, you will not be able to roll it back to Indian GAAP in a subsequent period. So once Ind AS are followed, those have to be followed on an ongoing basis, mandatory. So even if, let's say, this is a parent, this is a subsidiary, and parents sell the shares of subsidiary in future to someone else, and this is no more a subsidiary, joint venture, associate, this company once adopts Ind AS because of indirect applicability, they will not be able to go back to the Indian GAAP. Even if they are not listed, even if they do not meet the net worth threshold, they will not be able to go back to the Indian GAAP. They will have to follow Ind AS. Once Ind AS are followed, adopted, those are to be followed on a consistent basis. Are you with me, everyone? Perfect. All right, great. So this was the applicability. All right, any questions with respect to applicability? All right, thank you so much.